Crypto Hotep here with another investing video. We are on week 58 of the Family Portfolio and Dividends Tracker. Now, if you're unfamiliar with these videos, feel free to go to week number one. Week number one is where I describe my whole methodology on this tracker, the portfolio, my thought process. Basically and quickly, in a nutshell here, I gave my family a short list of stocks to choose from based on my research, somewhat safe stocks as well as dividend and growth stocks. They picked the companies that they most resonated with, and we proceeded to use M1 Finance as our broker of choice. You're going to see within M1 Finance, you're able to make a big portfolio and then have sub-portfolios called pies within it. Every one of my family members has a pie of his or her own stocks that they're choosing, and every week we go through this portfolio. We go through balances, dividend activity, any buys, any sells, but not too many sells because we're more focused on continuously buying into the market and continuously buying these well sought after and well-established companies and investing for the long term. If you find these videos helpful, feel free to like, subscribe, comment. Let me know what you think, but by no means is this financial advice. Please do your own due diligence before investing. With that being said, guys, before we go to week 58, we always go back to the last prior week, which is week 57, to see where we were at. So week 57, we saw a balance of 21.57 and 91 cents, a money-weighted rate of return year-to-date of a negative 5.40%, market gain of a negative $111.10, and dividends earned of $6.59. So today, this week, we did crack 2,200. Okay, so our balance sits at $22.04.10. So $2,204.10 here. Money weighted rate of return is a negative still, but we are below 5% at 4.94% year to date. Market gain of a negative $103.19. Dividends earned of $6.69. So let's see what's going on here. So the activity, we did have a little bit of activity here between last week and this week. This week, my birthday was on April 27th, so I deposited $38 from the account for my age there, and it's actually pretty nice. These, just to dovetail in a quick semi-rant here, that there should be no excuses other than access to money as to why you can't invest. If you have access to a little bit of money, you should be able to invest this money very easily because of the technology here. Just look at this. Back in the day, you couldn't buy fractional shares of stocks. You couldn't do all of this with any of the technology because there wasn't any. So now what I did was I deposited just $38, which represented my age that I turned, and within that we were able to make 17 buys of that $38. So what actually happened? Now, one thing I did do, I did sell DTE Energy from my growth stock portfolio, and I proceeded to add VICI to my real estate portfolio, and I'll show you that. But for the buys, we bought Broadcom, NVIDIA, ExxonMobil, CrowdStrike, MicroStrategy, American Express, AMD, Waste Management, Pfizer, Visa, Moody's, Johnson & Johnson, Caterpillar, Aflac, Chevron, Tesla, and Union Pacific. All of these 17 buys equated to $41.09, which also encompassed this sell right here. That's why it's more than the 38. Okay, so with that being said, we did also buy a little bit of Microsoft. We had a little bit left, so we bought a little bit of Microsoft, which had fantastic earnings this week, and they smashed their earnings. They beat earnings per share, and also they beat revenue as well. So fantastic job by Microsoft. So we had a lot of buys into my portfolio of stocks due to my birthday here, and let's see how where we landed at. Okay, so as always, guys, we go bottom to top, and unfortunately at the bottom is my wife's stocks here, and her balance as of right now, year to date, $213.91, still over $200, which is very encouraging. Money weighted rate of return of a negative 2.42%, market gain of a negative $4.43, dividends earned of 46 cents. So Pepsi has seen a direct sell-off, and that is in the negative currently year to date, negative over 12% for Pepsi. I'm not really concerned with that, but again, if we have recession fears, some of the things that are being cut from consumer spending are things like pop and even fast food, as people are tightening their budgets, if you will. So Pepsi is the latest casualty for that. What's odd though is Coca-Cola, you will see in my portfolio, is the direct opposite. Coca-Cola is actually in the green, so we'll go over that. But as of right now, Pepsi is a negative. Celsius is still holding strong with their portfolio up over 35%. Tesla down over 23%, and Google down over 15% as of right now. Okay, let's go to our middle stock. Our middle stock has a balance year to date of $234.85. Money weighted rate of return of a negative 10%, market gain of a negative $21.04, dividends earned of 60 cents. So Costco still up in the green. No matter if it's a recession or not, Costco is still going to Costco. And it's probably one of the most consistent stocks I've ever been a witness to. It's simply fantastic. Sony, which we just delved into for our middle and our youngest stocks to supplement for the Nintendo that we had to sell, is doing pretty good, up over 18% year to date. Google up over 10% because we did buy Google at a different time frame than my wife's stocks. That's why there's a differentiation with those percentages. Tesla still down over 20%. Starbucks down over 12%. They did have a miss in their earnings, but CEO is provided some encouraging or some words of encouragement, but they did loosen their guidance for the new year. Meaning, and I believe Starbucks did not even want to give guidance just because of the economic uncertainty that's going on. Target Corporation still down over almost 30%, and then Amazon down over 14%. This is at a steal. Is that a buy right now? I would say. Let's go to our youngest. Our youngest year-to-date balance of $280.42. Money weighted rate of return of a negative $2, or not $2, but 2.95%. Market gain of a negative $7.27. Dividends earned of 33 cents. Again, Tesla, common position here with the middle, and then also my wife's portfolio down over 25% in Tesla. Apple down over 12% in 12% year to date in Apple. But again, Apple had fantastic earnings today. They smashed both the earnings per share and revenue. Just a fantastic job from Apple. You never bet against Apple. That's what I found out in the stock market. There are several companies that you do not bet against. One of them being Apple, another one being Costco. Never bet against Costco, and as we can see here, up over 13%. Costco, Sony, again following the same trajectory as our middle, up over 20% in Sony, and then Starbucks down over 13% year to date. And let's go to mine. Let's see what happened after those buys that we did. So currently balance sits over $733.88. Money weighted rate of return year to date 1.58%. Market gain of a negative $14.16. Dividends earned of over $3.93, or $3.93, I should say. So with mine, again, double digit red is technology. Technology is double digit in red. However, again, Microsoft holding strong here, up over 4% in Microsoft. Everything else is double digit red. Meta did also have some good earnings as well, and they released their earnings the same as Microsoft on the same day. So that's why you can see theirs, even though it is in the red, it's single digits, down over 3.5%. Once this starts kicking up, once my technology sector starts kicking up, I can tell you right now it's going to be it. The portfolio in itself is going to be just going gangbusters here. Industrials and energy still in the green here, up over 4%. Finance is down over 1%. Consumer and staples here. Costco again in the green. You're starting to see a trend here with Costco. Doesn't matter which portfolio it's in, Costco is still again going to Costco. Walmart again up over 8%. We think about it. Recession fears. People want to stock up on groceries. People are going to peel away their budgets and money from dining out. Probably want to cook more and save money. Got to get groceries. Got to shop at Walmart. Got to shop at Costco for those. Target still down over 25%. Church and Dwight down over 11%, 11.5%. Kroger, again, Kroger following the same path as Walmart. Costco, grocery store, recession. It kind of just paints the picture itself here. Colgate, Palmolive, almost at a 0.5% increase. Kraft Heinz down over 5%. TJ Maxx over 6%. You may ask yourself, why is that? We just talked about groceries. Correct. But TJ Maxx, if you're unfamiliar, they have a lot of discounted clothing and apparel. People are looking to cut costs, but still need clothes because maybe kids are involved. They need clothes for the kids because kids do not stop growing at all, for instance. And this is where TJ Maxx benefits greatly again with the recession because of their low cost shopping model. So a lot of defensive stocks here, and that builds a nice portfolio. Pharmaceutical up very slightly here, and then restaurants and food. As I mentioned before, we look at Coca-Cola. Coca-Cola's up over 15% in my portfolio versus Pepsi, which is down over 12% in my wife's portfolio. Two sides to the story here. Same industry, same beverage type, but two different company models here. Okay, Hershey, we just did an analysis on Hershey last week, up over 1.5% on Hershey. McDonald's, again, recession type, up over 8% on McDonald's. Domino's, same type of deal. Domino's even has, I think they even have a half off pizza deal that I saw on commercials just in time here. So Domino's Pizza up over 15%, Smucker's Company up over 5%, and then Starbucks down over 9.5% here. Okay. And then real estate. What I did was I took out the DTE and I added VICI Properties. In VICI Properties, I primarily just added just for that dividend yield, if you will. So FRT still down over double digits, but really holding up nicely. In Public Storage, of course, doing what it does there. Okay, and let's go to our oldest very quickly here, down with a balance of $741.04. Money weighted rate of return of a negative 7.83%. Market gain of a negative $56.29. Dividends earned of $1.37. The regular culprits here. Apple, Costco is still going to Costco, no matter the portfolio. McDonald's, right here as well. And then Tesla, again, down over double digits there. All in all, portfolio looks good. 2204.10 for the week of 58 here in the family portfolio. If this video was helpful for you guys, feel free to like, subscribe, comment. Let me know what you think. But as always, thank you and happy investing, guys.